Good morning, everyone. My name is Claire Baker. I'm an Associate Director at BDO in the tax team, and I have James Trainor with me, who's a partner in our employment taxes team.
Morning, everyone.
I just want to welcome you to this morning's webinar. It's a BDO technical update, and we're dealing with the federal and New South Wales government stimulus packages, specifically to deal with the COVID-19 stimulus. So just before we get started, just a few housekeeping measures that just want to run you through quickly. So you're able to submit a question. You can submit questions in the questions pane. All submitted questions, we will, if we have time at the end, we may be able to take some questions and answer them at the conclusion of the webinar. Otherwise, we will get back to you afterwards via email or via phone call. The presentation slides, they're loaded into the webinar as a handout. If you have a look on the right-hand side there's an Access Handouts tab. Click that and you should be able to see the presentation slides. If you're having technical difficulties, click on either the Support tab or head on over through that hyperlink and someone will get in touch with you. Following the session, you'll be sent an email which contains the presentation slides, a link to the recorded session and details for James and myself. So if you have anything you'd like to follow up post-session, please feel free to get in touch with either of us. Basically today we're dealing with the tax measures that have come out of the federal government stimulus package and the New South Wales state government stimulus package. So specifically we're looking around the cash flow assistance measures, the business incentive measures around assets, and we're also going to quickly touch on the measures which were announced very late yesterday afternoon around the payroll boost, as well as some state government measures in terms of payroll tax and things like that. So in terms of the cash flow assistance for small businesses and not-for-profits, the main one that we're looking at the moment is the cash boost for business. So this assistance will assist business to manage cash flow challenges and help businesses retain their employees. There are basically, the government's providing up to $100,000 to eligible small and medium-sized businesses and not-for-profits, inclusive of charities, that employ people. The minimum payment will be $20,000 paid in 2 tranches. And the payments are designed to help businesses and not-for-profits with their cash flow so they can keep operating, paying their rent, electricity and other bills. So in order to access this cash boost, aggregated turnover of the business must be less than $50 million. And within this, it's important to remember that it's aggregated turnover of the group generally, so we need to be a little bit careful in assessing whether or not you're less than $50 million if you have a wider group that comes into play. So that's something to bear in mind. And it's turnover based on the prior year. So our understanding is that the ATO are looking at 30 June 2019 turnover. Another key part is that you must have employees as at the 12th of March 2020 being the date that the stimulus was announced. Within the stimulus, there's a number of anti-avoidance measures, and one of the ones that the ATO have said that they will be looking into is any employees that are added to the payroll post 12 March. So the ATO are aware that people may seek to add people onto the payroll to access this boost, and they've already put that out as something that they will be keeping an eye out on. So in terms of accessing the payments, there's two payments. The first payment will be paid in April with reference to the 31 March activity statement. And we've been told that they will begin to process those payments on the 28th of April. So it doesn't matter how soon you lodge your March BAS, they will commence processing them on the 28th of April. Additional amounts will then start coming through in May, June and July with reference to the activity statements that are lodged. So in the first tranche of payment, the payment will be up to $50,000, which is calculated as 100% of any pay-as-you-go withheld from employees' salaries. The second payment will start coming through with reference to the June BAS and then the July, August, September activity statements. And that payment will again be equal to the first payments that you receive. And it will be paid up to $100,000. Another point to note is that these payments are tax-free. So what we are recommending to people, to clients, is that they need to set up a separate account to account for these payments as they get received. It isn't just a reduction of salary and wages, a reduction of pay-as-you-go withholding. It needs to go into a completely separate account so that when we're doing tax returns or when tax returns and accounting is being done for FY20 and FY21, we're making sure that these are being picked up as tax-free payments. So this slide we've already been through. In terms of eligibility, in order for the ATO to assess eligibility, at the moment, the legislation says that there needs to be some sort of lodgement that has been made between 1 July 2018 and 12 March 2020. So they're saying that's either a 2019 tax return or an activity statement that shows sales, business income or consideration for a supply. In order to access the second payment, the condition is that it must continue to be an active employer. So I thought it might be best just to run through a couple of examples to show how it works, because it is a little bit fiddly. So we've got Sarah's construction business here. So Sarah owns and runs a building business in South Australia and employs 8 construction workers on average full-time weekly earnings, and they each earn $89,730 a year. Sarah reports withholding of $15,008 for her employees on each of her monthly activity statements. So under this business cash boost, Sarah will receive a credit of $45,024 for the March period. So that is the 15,008 multiplied by 3. And that is the payment that will come through from the 28th of April. She will then receive a credit of $4,976 when she lodges her April activity statement. And that is essentially the first lot of $50,000, being the $50,000 cap, less the $45,000 that was paid out with reference to March. So that caps Sarah out at her $50,000 cap. She will receive no payment for the May activity statement because she's already reached the $50,000 cap. We then move on into the second tranche, the second tranche of the business boost. So Sarah will receive an additional payment of $12,500 for the June period, equal to 25% of her boosting cash flow for employees payment. So that's 25% of the $50,000 that she received for the first period. And then that will be paid out equally for the June, July, August and September periods to a total of $50,000, meaning that Sarah's received a total of $100,000 from the government under this measure. Contrast this with Tim's courier run, and I like this example because it's an example of, this is an example where no pay-as-you-go withholding is paid. So they're an employer, he has 2 employees, but he doesn't pay any pay-as-you-go withholding. So under this example, Tim runs a small courier business in Melbourne, and he employs 2 casual employees who each earn $10,000 a year. In his BAS, he doesn't withhold from any of these payments because he's under the tax-free threshold. Under the government changes, Tim will be eligible to receive a credit of $10,000 in his March quarter activity statement because he pays salary and wages, but he's not required to withhold. So that shows you how the minimum $10,000 kicks in. Tim will then receive an additional payment of $5,000 in his June quarter activity statement and $5,000 in his September quarter activity statement. So in this circumstance, Tim gets $20,000. So the other area where assistance is with regard to apprentices and trainees. So the government is supporting small business to retain their apprentices and trainees. Eligible employees can apply for a wage subsidy of 50% of the apprentices or trainees' wage paid during the 9 months from 1 January 2020 to 30 September 2020. Where a small business is not able to retain an apprentice, the subsidy will be available to a new employer. So employers will be reimbursed up to a maximum of $21,000 or $7,000 per quarter per eligible apprentice or trainee. Support will also be provided to the National Apprentice Employment Network to coordinate the employment of displaced apprentices and trainees through their work, throughout their network of host employers across Australia. So in terms of eligibility, the subsidy is available to small businesses employing less than 20 full-time employees who retain an apprentice or trainee. The apprentice or trainee must have been in training with the small business as at 1 March 2020. Employers of any size and group training organisations that re-engage an eligible out-of-trade apprentice or trainee will be eligible for the subsidy. In order to access this, you need to register, and you can register from early April, and the final claim must be lodged. Any final claims must be lodged by the end of this calendar year, 31 December. If anybody is interested in this, I can point you towards some websites where there's further information available on this and where you can access the paperwork to get the ball rolling on these claims. So in addition to the cash flow around pay-as-you-go withholding and assisting businesses in that way, the government has also announced 2 business investment stimulus measures as part of the package. Essentially, there's a new instant asset write-off, and there's also a new accelerated depreciation scheme. So in terms of the new instant asset write-off, it applies to new and second-hand assets that have been used or installed ready to use between the 12th of March 2020, being the day of the announcement of the package, and 30 June 2020. The threshold has been increased to $150,000 per asset, up from $30,000 previously. and it applies to businesses with an aggregated turnover of less than $500,000. So essentially, if you are running a business that has an aggregated turnover of less than $500 million, and you have purchased or you have installed ready to use an asset before 30 June 2020, you can get an immediate write-off of up to $150,000. Important to note that from 1 July 2020, the instant asset write-off is slated to revert back down to $1,000. So if there's any spare cash in the business and you're looking to invest in capital, pre 30 June 2020 is the time. So again, I've just included a brief example from Treasury that shows how that works. Fairly straightforward. Samantha's specialty roasters business purchased 5 new conveyor belts that are worth $40,000 each on the 1st of May, so that's within that time period. Under the new $150,000 instant asset write-off, Sam Specialty Roasters is entitled to an immediate deduction of $200,000, being $40,000 multiplied by 5. So the second investment incentive measure is a short-term accelerated depreciation measure. So essentially, businesses can claim a deduction of 50% of the cost of an eligible asset on installation, with the existing depreciation rules applying to the balance of the cost of the asset's cost. Again, businesses are eligible where they have an aggregated turnover of less than $500 million. And eligible assets are those that can be depreciated under Division 40 of the Tax Act. So we're looking at plant, equipment, and some specific intangibles such as patents, perhaps, that have been, in terms of acquisition, they need to have been acquired after the announcement date, so after 12 March 2020, and they need to be installed by 30 June 2021. So this is a measure that applies longer than the $150,000 instant asset write-off, but potentially gives businesses access to a little bit of a cash boost in terms of lower taxable income because of the accelerated depreciation. It's important to note this measure does not apply to second-hand Division 40 assets or buildings or other capital works that are depreciable under Division 43. So again, I've just included a quick example so that you can see how this supercharged depreciation measure works. So we have a construction company, J Construction Solutions, who has an aggregated turnover of $200 million for 2021. On 1 July 2020, they install a $1 million truck-mounted concrete pump for use in the business. So under the existing arrangements, they could claim a 30% depreciation in the first year based on the asset's effective life of 6 2/3 of years. But under the new incentive, the company can claim a depreciation deduction of $650,000 in 2021. So this consists of 50% of the concrete pump's value, so $500,000, $1 million times by 50%, plus 30% of the remaining $500,000 of the asset cost, which gets depreciated under the existing depreciation rules. So this gives the company a deduction of $350,000 more than it would otherwise be entitled to. So it's a tax benefit for them in the 2021 year of $105,000. So it's again, to the extent capital is required to be put into the business in terms of fixed assets, it's a good opportunity to get some of the depreciation back on that in a expedited manner. So the final thing I just want to touch on quickly before passing over to James to give some comments on some other areas is just the ATO relief measures. So the ATO have come out and introduced provided access to a number of relief measures to taxpayers. Basically, they're allowing deferrals of up to 6 months in terms of tax payments, including pay-as-you-go instalments, income tax assessments, FBT, etc., for affected businesses. They're allowing affected businesses to revert to a monthly reporting cycle from a quarterly reporting cycle for GST purposes in order to access any GST refunds quickly. There are some measures around the ability to vary pay-as-you-go instalments without penalty. However, in order to access any of these, we need to get in contact with the ATO and start a dialogue and basically talk to them about what's happened to the business, why is it affected, how it's affected, how we can work together to access some of these administrative concessions so that we can all move forward. So I just want to raise that it's not like the bushfire relief where if you're in an affected postcode, the ATO basically just blanket gave extensions and things like that. With this one, there needs to be a dialogue opened up with the ATO. There is a specific number to ring, and I understand that they're moving resources from other areas of the ATO into that number to assist. So again, if this is something that you potentially need some help with, let me know and I can point you in the right direction. So James, I might pass over to you and you can talk to everybody about the hot off the press stimulus measure from last night.
Thanks very much, Claire, and good morning, everyone. Thank you for joining us. I hope everyone's keeping safe and healthy in these very turbulent times. Yeah, what we saw yesterday from the government was, in a word, massive. There was a significant announcement in relation to a wage subsidy, the JobKeeper wage subsidy. And you know, the government's expecting this is something that's going to cost them in the tune of $130 billion and impact maybe 6 million employees. So it's quite a significant measure that the government is going down the path of. So what's the WageKeeper, the JobKeeper wage subsidy? The proposal is that the government will pay eligible employers $1,500 per fortnight for each employee which they keep on, and the payments will go for up to 6 months. So the first thing, who's an eligible employer? There are sort of two categories. Employers who have a turnover of less than $1 billion, where that turnover is reduced by more than 30% over a minimum 1 month period since the 1st of March 2020 relative to 1 year ago. The second group are employers who have a turnover of more than $1 billion, and in that instance their turnover needs to reduce by more than 50%. Now what we don't know at this point is whether that turnover is measured at a group level or a specific employer level. I don't expect it'll be down to a division level within a particular organisation, but we're still waiting for some more guidance around what the group or the employer will be. Importantly, employers must elect to participate in this particular scheme. And as the media was reporting this morning, I think there's some tens of thousands of employers who've already registered with the ATO to participate in the scheme. Employers will need to provide the ATO some information to support the downturn in their business, and there'll also be some monthly reporting required in respect of the employees who are eligible. Cash from this subsidy will come from being paid from around the 1st of May, and it'll be backdated to 30th of March 2020. And going forward, it will be paid monthly in arrears. Now, the subsidy applies in relation to eligible employees. So who are they? So eligible employees are full-time, part-time, long-term casuals. So those are casuals who've been employed on a regular basis for 12 months or more. It also includes employees who have been stood down since the 1st of March, and also applies to sole traders as well. So businesses that actually don't employ staff are still eligible to receive the subsidy. It applies, the employees need to be Australian citizens or permanent residents, and of particular note here is that it actually excludes some temporary visa holders, and there's been a bit of media around, particularly in the hospitality industry, where there might be a lot of people from overseas working in that industry on temporary visas, and as the government announcement, those people will not be eligible for the subsidy. Eligible employees need to have been employed as at the 1st of March 2020. They need to be at least 16 years of age, and to cover the potential that individuals might have multiple employers, they can't be in receipt of a JobKeeper payment from another employer. So employees will typically need to identify one employer as their main employer, and that's probably going to be done by the employer that's actually providing the tax-free threshold. So a lot of this information will actually come through the payroll data, which companies already have. So what's the employee end up with? Well, the employee ends up with a pay of at least $1,500 per fortnight. And that'll be the case even if their regular wage is less than $1,500 per fortnight. So employee gets in $1,500 per fortnight and has to pay that out to the employee. So they can't keep an amount if the employee, for example, was being paid regularly $1,200 a fortnight. There are some comments around superannuation in the announcement from government, and that is that superannuation won't apply to the excess amount. So if you have an employee who's usually paid $1,200 a fortnight and now they're being paid $1,500, superannuation will apply to the regular $1,200 per fortnight, but the additional $300 up to $1,500 a fortnight, that's not going to be required for compulsory superannuation. Although of course employers can choose to pay superannuation on that, but it won't be something that you'll be getting from the government to help fund. Look, at this stage, in terms of the information around what it means to have that downturn, we're still waiting for more detail around what that is going to require. Also worth noting that for sole traders, there'll be a separate application process through with the ATO to demonstrate again the drop in turnover and to identify a particular individual who will receive the payment of the wage subsidy. Sorry, jumping through a little bit too quickly. The next incentive is the ability for individuals to get early access to their superannuation. This was a measure that was announced, it would seem like a long time ago, but it's probably only a week or a couple of weeks ago. What this will enable is individuals to access up to $20,000 of superannuation funds. That's $10,000 in the current financial year and a further $10,000 next financial year. For individuals, that payment to them is not taxable, and it also doesn't affect any other Centrelink benefits that they might be getting. And this is something that the individuals need to apply directly through the ATO or to the ATO, and they can do that through MyGov. To be eligible to access superannuation, the individuals need to have met certain conditions. Sorry, just get the slides to jump on. There we are. So to access the funds, the individual needs to be unemployed. They need to be eligible for certain other types of government benefits that are listed there. And on or after the 1st of January 2020, they need to have been made redundant. Or if they weren't made redundant, then their working hours need to have been reduced by 20% or more. Any instances of a sole trader, their business either needs to have been suspended or again, a reduction in turnover of 20% or more. So once an individual satisfies those requirements, then they're able to apply to the ATO to receive those payments out of their superannuation fund. Now, of course, individuals will need to decide whether, financially that's the right thing to do in terms of access to super. And then, so there's a whole lot of other decisions that people need to make around that early access. We'll touch base now on just a couple of other points which aren't really part of the stimulus package, but nevertheless are certainly ways that employers can help their employees, particularly those that are working from home. So there's a number of exemptions in the FBT rules that are available, including travel to and from the office if people need to get in, not using public transport, but that exemption for travel by taxi, for example, to get to and from the office is something that employers can provide. Employers can also provide their employees with one personal electronic device, so something like a laptop or an iPad, which they would use in their employment, and they can be provided with one per year that's exempt from FBT. So again, helping people to work from home who might not have access to technology, laptops, computers at home, for example. Employers can also rely on the otherwise deductible rules. So if the employee is now having additional expenses in relation to home internet or phone use, or other costs associated with maintaining a home office, then the employer is able to reimburse those expenses. And if the employee would have been entitled to a tax deduction, an individual tax deduction, had they paid those expenses themselves, then there's an exemption from FBT for that reimbursement. And finally, employers can also help out by reimbursing employees for the cost of home equipment, home office equipment, desks, chairs, that sort of thing, computer monitors, provided the cost is less than $300. And this is relying on the minor and infrequent exemption that allows for reimbursement of those sorts of expenses as well. Now, the states are also stepping up to the plate with a number of concessions and exemptions which are available, and we're going to focus mostly about those that are impacting the payroll tax of employers. And we'll cover a few jurisdictions, but we'll focus on New South Wales. And I think the important thing here is to get a picture that there are a number of concessions and exemptions. As with most things payroll tax, there are some similarities, but there are a lot of differences between each state. So again, for employers, it'll be a case of looking at where are your employees located, what sort of payroll tax are you paying, and what concessions are available in each of those states, and it might be quite different. So what's New South Wales doing? For businesses with payrolls of up to $10 million, there is a waiver of payroll tax for the rest of the 2019-20 year. So basically, that's a saving of the quarter of the payroll tax bill that would otherwise be paid. So that's a significant benefit for those smaller employers. Above that size, above $10 million, there won't be any waiver of payroll tax, but a benefit that those larger employers will get is that the state will accelerate the increase in the payroll tax threshold. So currently it's $900,000 before you get into paying payroll tax on wages. That will now increase to $1 million from the 1st of July 2020. So that's coming forward a little bit from where it was. There are a range of other industry and employer-specific concessions, so a range of fees and charges for small businesses are being waived. The government's also looking to accelerate some other public infrastructure maintenance, construction, capital works, again with the aim of trying to stimulate the economy and keep people employed and engaged. Without going into a huge amount of detail in the other states and territories, in Queensland there are payroll tax deferrals and waivers which are available, and also refunds. Interestingly, in Queensland they've split the employers in two. So employers whose group payroll is $6.5 million or less are entitled to some refunds, as well as a waiver of payroll tax for the rest of the year, and an ability to defer payroll tax which is due for the entire 2020 year and not pay that until January 2021. In Queensland, for employers who have more than $6.5 million in payroll and they're being affected by the COVID-19 virus, then there is an ability to get a refund of payroll tax, and again a deferral of payroll tax payments through until January 2021. So that's available for larger businesses there. Again, there's also some specific targeted stimulus that's being pushed through to tourism, hotels and primary producers, as well as some loan facilities that are being made available to companies in Queensland. In Victoria, they're mainly focused on small business there. So the deferrals and refunds are targeted at small and medium-sized businesses with payrolls of less than $3 million. They're also providing some rent relief. So for commercial tenants who are leasing their or leasing from the government, then there is some rent relief that's available. And there's also, again, some quite targeted business support for employers and businesses who are operating in Victoria. Similarly, in Western Australia, Tasmania and the ACT, all of those locations are offering deferrals and refunds of payroll tax. Again, in most instances, they are targeted at smaller businesses. So different threshold levels in terms of whether you're able to access those. And also in Tasmania, there are some interest-free loans that are being provided or being offered to businesses in certain sectors, tourism, some agricultural sectors, which are quite key to the Tasmanian economy. So I think, again, the sort of key point around the state stimulus packages is that they are different in each state, and businesses will need to look at each particular state and determine, whether there is a measure or something like that which will apply to them in that particular state. So that covers all of the issues that we were going through today. Look, this is a very fluid situation, and we're seeing lots of changes, lots of announcements that are coming through, from the government from press release, and the legislation is taking a little bit of time to catch up to that. So government has announced that Parliament will sit again to pass some legislation around the latest measures which were announced yesterday. So we'll see once that legislation comes out a little bit more detail, and that will help us, I think, to answer some of the questions that we've seen pop up as we've been going along. And Claire and I will certainly take an opportunity to go through them. There's been a significant number of questions to go through and address those. We've seen some similarities, so we'll come back to you around that. But Look, certainly, Claire and I thank you for your time this morning. We appreciate you dialing in. We've seen the attendees sort of jumping as we go. It feels a little bit like Justin Bieber, perhaps not quite the millions that he would have tuning into his sessions, but look, hopefully you found this useful, informative. We're certainly, managing things remotely, but we're on top of all of the changes that are coming through and here to lend assistance as you need it. So once again, stay safe, be healthy, and thank you very much for dialing in today.